Welcome to the Live Squawk podcast, where professional traders, investors, and market insiders get the unfiltered insights that matter most. Stay ahead of the curve with expert interviews and exclusive market commentary.
Hello, and welcome to Live Squawk's Market Talk FOMC preview on Wednesday, the 29th of July, 2026. On this episode, we'll be previewing the July FOMC rate decision due in a few hours. To be precise, we'll get the announcement at 1400 Eastern Summer Time, 1800 GMT, followed by 30 minutes later by a press conference hosted by new Fed Chairman Kevin Walsh. To help me get to grips and understand, make sense of all this, I'm joined by Danielle DiMartino-Booth, CEO and Chief Strategist at QI Research and former Fed Reserve insider and economist. A warm welcome to you, Danielle. It's a pleasure having you on today.
It's great to be here. I'm kind of excited to preview this. I haven't been this excited in years.
Good. Well, we've got a lot to get through as well. And like you say, it's likely to be an interesting one, even though we're expecting the rate announcement. The consensus is that we'll keep rates on hold at today's meeting. There are obviously factors around that. So just to give a quick heads up to those coming to this completely new. In terms of today, then, we've got today's FOMC rate decision. There's a growing sense that new Fed Chair Kevin Walsh must balance competing political and policy pressures, as he is to stay on, if he's to stay on the right side, with a dovish US president, while also managing a federal open market committee that has become increasingly hawkish. Regardless, the Fed Reserve is widely expected to keep its policy unchanged within its current range of 3.5% to 3.75% on its target range for the Fed funds rate when it concludes its two-day meeting today. I want to bring in Danielle now on this. One of the things I've seen that you've written, all right, Fed Chair Walsh has said he's all about surprises. The question is, will he deliver one at his second FOMC meeting? That's a question you pose. What are your initial views on what we're to expect today, Danielle, and what's behind, do you think, the decision that we're likely to see?
Well, so first and foremost, I think that I think the idea of a good family fight, as he has repeated on multiple occasions, theoretically, a good family fight ends well. And that would mean not too many dissents, if any dissents. He, of course, came out of the gate with a unified front and full consensus. And the question is today, if he wants to maintain that consensus and the idea that he is a strong leader at the Fed, then we will have a unanimous decision once again. And that would mean paying heed to the hawks on the committee and pushing through at least a 25 basis point hike. I think what distinguishes Walsh and the idea of zero forward guidance is that he doesn't care what the market is pricing in theory. We're going to see today if that's how he feels it to be the case in practice. And I think you should set the table with the understanding that a strong leader who is almost singularly focused on price stability is going to deliver on that, and listen to the members of the committee who are importantly voters. Lori Logan of the Dallas Fed being one of them, who's been calling for rate hikes. We will see if he delivers on what some of the other Fed officials have effectively been providing in forward guidance, which I'm sure is irritating to him. We'll see what Mervyn King has to say about the idea of revamping communications. But if he wants that consensus maintained, I think he has to hike today.
Mervyn King was a former Bank of England governor more than a decade ago now, but a very stoic leader of the UK Central Bank. If we talk about the dissension, then there are some that are looking for two to at least three dissenters, potentially more there, trying to make a statement that the Fed isn't a shill. Do you go along with that? Do you think there's enough. I mean, Waller's one has been outspoken, I think, on where policy should be. Do you think that he could quell that sort of rising sort of dissension, or is that healthy? That he wants a family row, a family argument, if you like, and he said that's healthy discourse. Do you think it's healthy? Does it reflect a healthy Fed if that's the case?
Well, I think that dissent in and of itself is a very healthy reflection of an honest discourse around that huge oval table in the Eccles building. Um, and you're right. I mean, one of the most outspoken voices, that's Christopher Waller, who was in line to be Fed chair and was passed over. I think that he could easily pay heed to some of these dissenting voices as long as they're presenting um, real-time good data to him and not just relying on the Fed's old playbook, which Warsh has completely trashed in terms of saying, he's basically saying we should not be driving through the rearview mirror in making monetary policy. We should be trying our very best to look forward. And if he's given compelling enough arguments that there is reason for headline inflation, of course, with crude prices remaining at untenably high levels, gasoline prices here in the United States, back above $4 a gallon. If he feels that it's the correct take, that there is going to be pass through to core inflation, then I think he hikes, and I think he pays attention to the dissenters.
Okay, let's look at some of the factors, the inflationary factors. How much of a bleed through are you seeing in like, or secondary effects are you seeing within the sort of price component of the US economy at the moment? We've seen fairly steady and solid growth come through. Yes, there are elements, and obviously energy being a volatile sector has affected the headline rate, but we've really not seen at the core the elevated kind of price levels that many would have feared, really, and the bleed through in wages. In fact, if anything, the labour market is looking a slightly softer or just moderate at the moment. So do you see the signs of inflationary pressures building, and reason enough to outside of the political elements, if you like, within the Fed itself, the tensions there, do you see any necessity at this point to hike rates?
If you're talking about true follow through to core PCE, I follow Trueflation, TRU, very closely, and as of today, it's at 1.29%. Their core inflation metric, that's revealing weakness in rents as apartment concessions hit record high levels. We heard that from Zillow. Home prices, as we know, are under pressure nationwide, in not every single market, but these are the largest inputs, if you will, to the core. And we're hearing from companies like Procter and Gamble this morning that they're incapable of pushing through higher costs, that the purchasing power of households is not what it needs to be. And we continue to hear about layoffs in the economy. And as you mentioned, wage inflation is certainly not problematic. Indeed, wage growth tracker, is at 2.38% year over year. On a 6-month moving average, it's at 2.32%. So we're seeing pressure in wages as we see more and more Americans working multiple jobs just to make ends meet. So I don't think there's justification in the real-time data to suggest that there's going to be pass-through from higher energy prices. But again, he just needs a compelling argument to sway him one way or the other. And I think if he does surprise with a rate hike today, and I know this is something of a curveball intuitively, that he could be setting up for an easing cycle into the U.S. midterm elections.
Which obviously would do his boss and president, the president, a load of favors, I guess, in that respect. But would it do his credibility any good? I mean, there was already skepticism going into this, but I mean, and I think it was quite a clever move bringing in Warsh, because traditionally he has been more of a hawk than a dove, and therefore could rail back against accusations that he was a shill and that he was brought in to lower interest rates. But if you say this scenario, if we get this scenario play out, that we hike and then we have to go into the midterms with rate cuts, it could bring back a level of skepticism, you think, from about the Fed's independence? Or is that just what I'm trying to get at is this purely on the numbers, and he would be above criticism in that sense? It's probably a rhetorical question, but just a quick response on that. Do you think?
Well, I think the bond market has already done the heavy lifting for him, and
True.
should he press through with a rate hike today, it wouldn't hurt where bond yields are. In fact, you might see a rally at the long end of the curve in anticipation of the messaging that this sends in the absence of forward guidance. The market could easily price in more hikes going forward when exactly the opposite is going to be the case. But again, he's not going to do if he's concerned about the president, and I don't think he is. But if he's concerned about the president, a 25 basis point rate hike today really wouldn't do the current administration any serious damage because the bond market's already got it priced in.
Yeah, this is true. I mean, you look at yields now, and we've seen them steadily build over time, and it kind of reflects maybe a wider issue, not only with policy, but generally around the bond markets at the moment, and all things that are feeding into these high yields at the moment. Interesting. Just in terms of the economy itself, then, we've talked a bit about the bleed through. In terms of activity on the sort of growth side, do you see this AI input ultimately as a positive for growth? And how long do you think that will feed through? Are we seeing any effects from the AI boom in the economy already, or is this a more underlying and more midterm sort of phenomena?
So I think that as you see the proliferation of signs that certain players, Koch Industries being one of them yesterday, kind of getting out of the AI space, data centers going up for sale as opposed to newly constructed data centers, as well as the spreads in the credit market for these hyperscalers going up, more difficulty, less appetite for these AI massive bond offerings in the corporate bond market. I think you're starting to see kind of the waning days, especially if you look at the Korean Kospi as being kind of the benchmark. I think you're starting to see this AI trade turnover. And if that's the case, then you go back to what's happening in the underlying economy. A good friend of mine, Adam Josephson, yesterday posted that what's happening with waste management, that they're seeing the lowest volumes since COVID, and that there is a very high correlation between waste and what's being picked up by the garbage man, so to speak, and GDP growth. Going into the GDP report, the most recent, I follow a guy by the name of Ben Herzon. He used to be at Macroeconomic Advisors. That takes me back some time, but now he's at S&P. His forecast going into second quarter GDP is 1.3%. In my mind, anything that starts with a 1 can easily be revised away, and that would more closely reflect what we're seeing in the real economy. Again, Procter and Gamble coming out this morning and saying we don't have that pricing power. So it's intuitive to me, at least, that there are plenty of signs that the real economy is slowing. We've got obviously, a meeting. We've got 2 labor reports that are going to hit before the September FOMC meeting, the next FOMC meeting. But again, it's going to depend on how quiet Warsh is after today. And if he remains silent, then it's anybody's guess going into the September FOMC. And I think we need to look forward to that. That's going to be where we get the next dot plot. And in recent comments in Portugal, he said that the dot plot was around for now, meaning, are we even going to see a dot plot at the September meeting? Are we going to, if he and I'm just throwing this out there. We're having obviously a broad, wide discussion, but if he hikes rates today, might there be a quid pro quo? Might he buy some silence of the hawks? And in doing so, really start to leave markets out to dry in terms of how to price what the next move is going to be.
Sure. Well, I mean, as you say, September brings the dot plots, and that was seen as the more natural time if they were to move on rates to do it, because they'd have, like you say, 2 whole cycles of data there. I want to bring it on the political front a little bit now, in terms of if the predictions, and look, think we've got a long way. It's a week's a long time in politics, and we've still got many weeks until we do get the midterms. And this is a broad question, so forgive me. What is the best outcome for the markets? What would keep the markets? I'm talking predominantly equity markets, because obviously pension funds and everything depend on that predominantly. But what do you think would be the best outcome? A Trump win of any kind, whether the Republicans retain the Senate, or how do you see it playing out the midterm elections, just in a broad sense?
Well, and this is where things get very tricky for young Warsh, because any surprise move will have potentially unintended consequences, unforeseen consequences on the markets. And the last thing you want to see, in theory, is for there to be a major market correction headed into the midterms, in which case the top of the K economy is at risk. And that's why he's kind of playing with fire when it comes to weighing consensus versus dissent, especially if there's going to be a communications vacuum. So he needs to tread lightly, because triple C spreads are suggesting that, alongside bankruptcies at a 15-year high, they're suggesting that there's real fragility in the credit markets. And that's the last thing that the president would want to see going into these elections, regardless of Fed policy, regardless of the on again, off again Iran war and it whipsawing energy prices. All bets are off if something happens in the credit markets and we have to remember, credit markets lead. It's the credit markets themselves that bleed into the equity markets, not the other way around. Equity markets are always last to react. Always. But if anything was to break out in the credit markets, that would not bode well for the current administration. It would not bode well for the fact that you only need 4 seats right now to flip the Senate.
Yeah.
And I think that's why individuals like Mitch McConnell are trying to stay as quiet as they can before August 3rd, to where nobody can be suggested to replace him. I think the GOP is trying to buy as much time and political capital as they possibly can going into these elections to retain that 4-seat majority.
Sure. Interesting. I want to bring it back as we sort of round out the episode to the press conference itself, because and this is where for journalists, they'll be bashing their heads against brick walls because of Walsh's stance. We saw him a couple of weeks ago at the Humphrey. Well, this is how old I am. Humphrey Hawkins testimony, or the semi-annual testimony on Capitol Hill. He really has been quite tight-lipped. He's quite a charming individual, Walsh, but manages to evade any sort of questions about forward guidance or monetary policy in any kind of sense, really. What can we take from what we're likely to see today? This is a JP Morgan report actually that said we should keep an eye on, I think it was the discount. If I can find the piece here. He said one other area to keep an eye on is the discount rate requests in the implementation note. This can give a sense of soft dissents of voting bank presidents and policy leanings of non-voting presidents. If we get a unanimous decision at today's vote, where are we going to find little chinks in armor? Where are we going to try and figure out any way forward? We haven't got a dot plot, as you said. We may not get one again, but where are we going to try and divine any kind of sense of guidance as to where things are going for what their thinking is for monetary policy?
So JP Morgan is spot on. Following the discount rate allows those on the committee without a vote across the 12 Federal Reserve Bank districts to have a voice. So that's certainly going to be one place. And again, I bring back the idea of quid pro quo. Kevin Warsh has his eye on the balance sheet, and he's got a great individual, Jeremy Stein, on that balance sheet task force. But is there some communication in this statement with regards to the balance sheet and Warsh's kind of insistence that nothing is going to change there, meaning here's your rate hike, but don't expect anything magnificent in terms of if markets are disrupted, don't expect me to come in with quantitative easing. In other words, repeat his stance on the balance sheet by way of getting a pound of flesh in exchange for a rate hike with a greater degree of conviction and commitment. And we'll see more in the minutes when they come out in 3 weeks, but a greater sense of conviction that nothing's going to happen on the QE front come what may.
Okay, interesting. Okay, listen, we're wrapping up this episode. So just to round it out, I guess, today, again, consensus is for an unchanged target rate, really, with any kind of clue as to whether, and like Danielle says, there is the potential that we see a surprise from Kevin Walsh here and then the FOMC in the fact that they may well hike, but potentially that brings in to play potential cuts this side of Christmas as well. But generally speaking, most analysts will be looking towards the statement and any meaningful sort of adjustments to that, or the press conference 30 minutes later. Just to recap, then we've got decision today at 1400 Eastern time. That's 1800 GMT. We then have a press conference 30 minutes later, where we'll hear from the FOMC, the Fed chair himself. So please, if you want to listen to that, you can come to livescoop.com, take out a trial, and listen in. We'll also be posting the decision up on socials and on our website for anyone who wants to view and hear what's going on. I'd like to thank my guest, Danielle. Danielle, it's been an absolute pleasure having you on. I'll put up your details. Danielle DiMartino Booth. Again, I'm so happy you agreed to come on today's episode, and I'd really love to have you on again for another episode, because I've found what you said insightful and really interesting. So thank you very much for your appearance today.
You're quite welcome, and I'd love to come back on. Thank you.
Fantastic. Brilliant. You can find today's episode there's going to be a quick turnaround to make sure everyone gets it out way before the decision itself. You can find us on the social media platforms or on the podcast platform of your choice. We'll see you again on the other side. But thanks, Danielle, and thank you all for listening, and we'll see you again soon.